Hi, Lenore Cabrera here, and I'm going to walk you through the closing entries. That's the last piece of this particular problem. So as you can see, on the left-hand side, we have our trial balance. The first step to closing is to close all the revenue. Revenue normally has a credit balance. Therefore, when you want to close it, or think of it as resetting the account, so you need to get the account balance back to zero so that you can begin the next year. So in order to close these revenue accounts, we need to create a debit entry. And there you can see them, $15,000, $25,000, $3,500. Once we have made those line items, we need to then close out our expenses. So as you can see, normally the expenses have a debit balance. Therefore, to close them, you would have to establish credit balances for both of these. So we have our revenue that we're closing, our expenses that we're closing, and the difference between the two, the difference between your debits and credits, will be put into retained earnings. This is a check figure that I have to make certain everything is adding up. So that is how you do what they call CJE 1, or Closing Journal Entry 1. You close all your revenue, and then you close all your expenses. The difference between the two will be put into retained earnings. Now, please note, if you needed a debit to make this journal entry balance, then you would have debited retained earnings. Now, the second journal entry is to close dividends only. So as you can see over here, we have dividends. The amount is $10,000 and it is a debit balance. So in order to close it, we need a credit of $10,000 in the dividend account. The debit is always retained earnings,